Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. Great to see everyone back on the portfolio, showing the channel so much support. Immensely appreciate that. For today's video, I want to continue talking about options, this time talking about my rationale for selling off calls and puts rather than buying calls and puts. I know a lot of you guys have probably seen in the news a few investors making millions of dollars by selling off calls, especially in some of the meme stocks. But I'm going to go through and tell you exactly why I do not do that. Selling of calls and puts is relatively lower risk, consistent income over time. By buying calls, you have to have the stock move substantially to make a lot of money. So if it does move, yes, you can make hundreds of thousands, millions of dollars, as some investors have, but that is very, very unlikely. The strategy I'm using, and you can take a look at all my prior videos going through my options income that I receive weekly, I make a consistent $3,000 to $4,000 a week, which is over $200,000 a year. So this is why I do that. I'm going to go through and tell you exactly with some examples here of what I'm doing and why I'm doing it. If you guys have not taken a look at part 1 and 2 of this series, please take a look at those. It'll put into context the covered calls and covered puts that we'll be talking about in today's video. I think it'll be a lot more easy to follow, much easier to understand what I'm talking about with some of these examples. Let's go ahead and go down in the portfolio to a couple stocks I've been doing a lot of options trading with. Let's first take a look at one stock that we can do a covered call with. Again, take a look at those prior videos. I go into detail exactly what a covered call is as well as what a covered put is. So Crispr, CRSP, as you guys know, this is currently in the portfolio. You can see under position, I have 500 shares, market value of $61,925. So 500 shares. Let's go ahead and do an options contract. Again, I can't stress this enough. Please take a look at those prior videos because I go through exactly here what a covered put is in the middle, sell a covered put, as well as what a covered call is, sell a covered call, which is what we'll do with Crispr. Since I have it in the portfolio, we'll do a contract for potentially selling it off at a particular price, which is called a covered call. So up on top there, you can see sell and call are both selected. So this is a sell call. The current price is $123.85. So let's pick a price that's above that. So if the price of the stock gets up to 127 here, for example, I'll have to sell off for 127. Let's do all of the contracts in the portfolio. And for doing this contract, potential contract, I'll have $1,225 credited to the account. And this happens no matter what happens with the stock. If it stays the same, if it trends down, if it trends up, I'm always going to keep that $1,225. On the bottom there, you can see the graph. 123.85 is where the price is now. If it trends up to 127, I'll have to sell at 127. If it trends up here, for example, 128, 129, I still have to sell back here at 127, losing a potential gain. So that's why that expected profit and loss is moving down there. And here, if it falls below the price of the stock plus the price of the premium, 129.45, then I'm potentially losing money. But the important part is that I only do this for stocks that I bought back here for 122, 123, 124, 125, for example. If I sell off for 127, it's a positive swing trade. I did not lose any money in that trade, and I still keep that $1,225 up on top. So no matter what happens, if the price moves down this way, yes, I'm still holding the stock. It's trending down, but I still make that $1,225. If it trends up, I still make the $1,225. If it gets to this point, I sell the stock off from the portfolio. I make a positive swing trade, so I don't lose money no matter what happens with this trade. This is why I do covered calls in this fashion. I can never lose money doing the strategy that I'm utilizing. Let's go back to the portfolio and go to Tesla to do an example of a covered put. And again, take a look at those prior videos. I go through exactly what we're talking about with a covered call as well as a covered put. So let's go into Tesla. As you can see on the bottom of the screen, I do not have Tesla in the portfolio currently. I do have one contract there pending, but I don't have any current shares. So I can't do a covered call since I don't have shares, but I can do a cash covered put. And that's in the middle here, sell a covered put. It gives myself the obligation to buy 100 shares of stock at the strike price by the expiration date. Let's go September 24th. Up on top there, you can see sell put is enabled. So the current price is $7.59. So I want to buy it less than $7.59. Let's go down, for example, to $7.30. So if the price of Tesla gets below $7.30, I have to buy at $7.30. But no matter what happens, I keep a premium of $540 in the account. So the current price is $759.05. it'll have to trend all the way down to this point here before I buy the stock. And this is the inversion point. This is simply the price of the stock and the options that I received. If it gets less than 724, I still have to buy at 730, but now I'm going to lose money on the particular trade. But the important part is with this stock, again, it has to move from here all the way down to here before I lose any money. If it goes the other way and trends up in price, I still make that options premium of $540. If it does trend down, but not to the point where I have to buy it, I still make money. And even if it gets down to this point here, I'm still making money until this inversion point. And let's say it does get down here. Well, at the very worst, I bought the stock at discount at $730. Yes, I'm going to lose money, but where it was trading at $759, I basically bought at discount. And I only do these trades in stocks I'm more than willing to hold for the longer term. So I basically bought the stock on discount. So that is why I'm doing selling of calls and selling of puts. No matter what happens with the stock, I'm going to make some money. And then with the put, it's a stock that I'm going to be buying at discount, and I'm more than happy holding for the longer term. Let's go, for example, and say, let's do a buy call, for example. So this would be buying a stock, or excuse me, spending money to buy a call, to buy a stock at a particular price. So for this particular stock, Tesla, $759, let's buy a call at $765, for example. So one share, I'll have to spend now $908. I do not get that credit to the account. I have to spend that money. So by spending that money, the stock, I'll get the right to buy the stock at the strike price. Again, this kind of goes through a nice little graph, exactly what we're doing here. But I'll do this kind of real time here for us. $759. So it has to get all the way up to this point here, $774.10, before we're breaking even. So this stock has to move in this direction. If it does not lose in that direction, I lose all of the money. Nothing happens. The contract disappears, and I lose $908. So it has to get up to $774.10 before I'm making any money on this particular stock, if that makes sense. So not only does it have to get up to $765, where I could buy the stock, I have the obligation, or excuse me, I have the right but not obligation to buy the stock. If I bought it here, I'm still losing money because I spent $908 on the contract. It has to get up to this point here, $774.10, before I make any money. So you can see here with my strategy, if the stock moves in the opposite direction, I make money. If it moves in my direction but not to the magnitude of my strike prices, I still make money. On the call contract, I make money no matter what. And on a put contract, at the very worst, I'm buying a stock at discount. If you buy a contract here, you have to have the stock move in your direction, and it has to move into a magnitude that's way higher than your strike price. So yes, if you get into an AMC or GME, GameStop, that has basically a pump and dump characteristic to it where it trends very high, then you can make quite a bit of money. But if it doesn't do that, you're not going to make a ton of money. Yes, you can, but it's super risky, and you're not going to have that consistency from week to week like I'm having in my portfolio. Again, take a look at all the prior videos. I do a weekly options premium on the portfolio, and I'm making $3,000 to $4,000 consistently on the portfolio. You guys can take those videos, take a look at those videos to confirm everything I'm saying in full transparency here. So that's why I sell off calls. That's why I sell off puts. It's much easier to make income than buying calls. Yes, you can make quite a bit of money by getting into the right stock at the right time. The stock trends up. You can make literally hundreds of thousands to millions of dollars, but it's very unlikely that's going to happen. The strategy I'm utilizing, it's very risk averse, and over the longer term, I think it has a better potential to make income. And on my portfolio, currently averaging anywhere from $180,000 to $220,000 per year, utilizing sell calls and sell puts with positive swing trades. So just wanted to go into that for this video, why I'm doing all of the trades that I'm doing, why I'm selling off calls, why I'm selling off puts in lieu of buying contracts. This is exactly why I'm doing that. I think buying contracts is much more risky. Yes, where there is risk, there is reward. The strategy I'm doing is consistent, and you guys have seen that on the channel with all my prior videos. So just wanted to quickly talk about that. If you guys have any questions about this video, anything I talked to you, if it was hard to follow, please let me know, and I'll do an updated video going into those questions. But not to make the video too long, I'll kind of end it here. Again, if you guys are new to the channel, if there's any particular video topic you want discussed, please let me know in the comment threads down below. And again, I appreciate all of your guys' support on the channel. So until next video, we'll see you then.